Welcome to my YouTube channel. In this video, I'm going to cover what are prop firms and should you be trading with them. As you know, I like to keep my videos unedited and raw. So let's get started. So what are prop firms? Prop firms are proprietary trading firms that essentially let you trade using their capital. Okay? Retail prop firms are prop firms that let you trade with demo account and you get paid the profits from that demo account. A demo account is an account that has paper trading money, so it's not actually real money. So for example, many of these fake traders, online, they try to flex like, oh look, I made like 20 grand trading off like 200k, 400k account, but in reality it's probably just like a demo account. No real, it's not actual money. So they just place a random trade, random lot size, huge risk, and they just got like 20-30k. But that's just one example of the fraud and scams that goes on in the trading industry. So prop firms are a gift, especially to people who don't have a lot of money saved up to trade. So essentially you're asking like, what's the point of trading with like demo account? But I'm going to explain to you how the prop firm business model works. It's essentially a Ponzi scheme in which they pay the traders who actually know how to trade money from the traders that do not know how to trade. So for example, most prop firms, they pay you like an 80-20 profit split, and essentially you can buy like a 100k challenge in which you're going to have two phases. Phase one is essentially 8 or 10% profit target, and as soon as you pass that, you'll move on to phase two, where you have like a 5% profit target. And as soon as you pass this phase, you essentially get a live account, which is not exactly live, it's just a demo account. And you'll trade in that account ideally for around 2 weeks. And whatever money you make from that account, you will get paid back 80% of it, plus a refund of the challenge fee. So let's say, for example, most $100,000, 100k prop accounts cost around $500, give or take. And you have very strict rules. So for example, if you lose more than 5% in a day, your account is breached and you lose the account. And your total drawdown is around 8, 10 or 12%. So for example, let's say your balance is at 100k. If your balance goes to 90k, you lose the account if the drawdown is 10%. And if you have an 8 or 10% profit target, your profit target is going to be around 108 or 110,000. So what happens is, let's say I pass the account, phase one, phase two, I'm finally on the live demo account, and I make 3% on 100k account. So essentially I would get 3,000, but I would get 80% of it. So that will be 2,400 plus 500. Let's say the challenge fee is 500. So you will get $2,900 in your first payout. And essentially from this first payout, the account is risk-free in the sense that you've gotten a refund of your challenge fee and you've made more money. So now you literally have no risk in the game, and you can just keep using these prop firms every 2 weeks, get a payout, 2%, 1%, 3%, 4%, week after week. And you can just keep building money from this. So in my eyes, it's like, in reality, your only risk is like $500, which is so less. And you can make like 3, 4, 5, 6%, which is insane, because you can make like $5,000 to $10,000 from these prop firm accounts just from spending $500. So the risk to reward is like completely off the charts. You get like a 1:100 leverage, which is crazy. So in reality, you honestly have nothing to lose. But obviously there are risks in the sense that recently a lot of these prop firms have been going down, and that's because the prop firm business model is not as profitable as it was before, in the sense that there are many more profitable traders compared to like before. So for example, let's say before there would be like 95% of the traders who use prop firms to be unprofitable. Now it's probably like 92 or 90%. So even that 5% is like a huge reduction in the profits of these prop firm owners, And it's a lot of headache involved as well, because recently MetaTrader, the tech, a lot of issues. But in my eyes, it's still, even if like What's the worst that can happen? Let's say you're a new trader, you're practicing how to trade. Most new traders, like, they fail accounts anyways. Like, it took me a long time to finally get funded, which was honestly, once you finally get your first payout, it just opens like a new reality and perspective in life, and you think like, oh my god, this is actually real. I can actually do this and not work a job. So yeah, I mean, what are the risks? Worst case scenario, you don't get paid and you lose $500. That's it. Compare that to a real trading account. Like, if you go on tilt, you could literally lose like actual money. Like, for you to realistically make like 2-3%, sorry, 2 to 3 grand on like a real account, you probably have to have at least 20,000 capital, so $20,000, and risk a high amount, you know. And let's say you hold trades over the weekend, and something happens over the weekend. Let's say, because recently Donald Trump got shot, there was an assassination attempt. If he actually managed to pass away, the markets would have literally crashed. And let's say you had a position of Apple over the weekend, let's say it was at 100. Even if your stop loss is at 90, the market is going to gap down, which many people don't know about this. They might just think like, okay, cool, like even if this happens, I'll get out at my stop loss of 90. But the market can crash and Apple can just go to 40, you know, and then your entire account, your trade will essentially be exited on 40, because the market opens on 40, you know. And you could lose your entire account. Let's say you had a 100k account and you had this trade on Apple. Let's say you risk 5%. If it opens at 40, you could literally lose way more, you know. And some people, they put 20-30% risk. You could lose your entire account, your entire savings, just for what, like, you know. So in my mind, prop firms are like a no-brainer. Even if it goes down, you have your practice, you have, you know, because even if these firms go down, no one can take away the skill of knowing how to trade. So to me, it's just like practice, you know, like, okay, cool, I did this, okay, this happens, you know, because even in trading, you need to learn to like just accept the fact that, okay, it is what it is, it was a loss, focus on the next thing, the next trade. Even if a prop firm goes down, I really don't care. The next prop firm, the next trade, the next account, because you can't just keep dwelling in the past. It's like, what you can do is learn from your past mistakes, but don't bring that baggage to like the next traders. You know, it's like a sport. In a football game, you lost the World Cup final, fine, because in trading you can do everything right and you can still lose, you know. It's like in football, Argentina versus France in the World Cup, Mbappe scored a hat trick, and they still lost to Argentina. Messi's the goal, by the way. But it's still, you know, anything can happen, so it's beyond your control. So all you can do is just manage the things that are within your control. And when you have low risk, only then can you actually not care. Let's say I risk 30% of the trade. Obviously, I'm gonna care. Like, I'm gonna be shivering. I'm gonna be like, oh my god, what's going on? But if I risk 1%, I really don't care. Because let's say I lose the next 5 trades, it's just like 5% down. But if I'm risking 10%, if I lose the next 5 trades, I've essentially lost 50%. And then it's like, okay, what am I doing? You know? So for me, prop firms are a no-brainer. I might make a video separately on where I talk about the best prop firms to go. But obviously the best advice I can give you is this. Research the firm that has been paying out a lot of people consistently. And ideally, the newer the prop firm, in the sense that if the prop firm has just entered the market, stay away from them. Look for prop firms that have been in the industry for a long span of time. So like over 5-10 years. Even 2 or 3, I would say, is good. So yeah, that's what I would recommend. And good luck to your trading. See you next time.